In a surprising turn, Jpmorgan Chase & Co., the largest US bank, has revealed a substantial investment in Bitcoin exchange-traded funds, totaling approximately $760,000. This move comes despite CEO Jamie Dimon's long-standing criticism of cryptocurrencies. Jpmorgan's investment spans various ETFs, signaling a significant shift in their stance towards Bitcoin. Don't forget to subscribe, like, and share, and let's start. And here we are looking into something that might show us the history repeating itself. And we've seen something like this before, and now we are probably looking into the same pattern building up. Will we see a massive increase towards 100,000, or will we go down after this? Bitcoin pump incoming. Bitcoin is currently testing the range low it reclaimed a few days back. Additionally, there's a trend line and a RSI breakout plus a bullish cross the MACD, probably nothing. Next up, Mac doubles going from 99 cents to $3.79 in 11 years, 300% total inflation, 13% annualized inflation. In 2025, a Mac double should cost $4.29. This doesn't account for shrinkflation of a patty, cheese, and bun. Gross regardless. It's obvious if you look at it. My plan remains unchanged. Weak hands need to get out of the market first before Bitcoin will rise towards 80,000. It has always been like this in the past. The structure is the same, only the price is different. This is what fiat does to your brain. Interesting, serious question then. If one Bitcoin is sold in units of sats and there are over 2 quadrillion of those, how can they claim scarcity, lack of dilution, hedge against inflation, debasement? This would seem to be common knowledge and, well, mass. Next up, here we go. When people say Bitcoin was created in a response to the 2008 financial crisis, they don't realize there was 40 years of research and development before that. And here we could see all of that. There's basically a bunch of those, and it was all appearing for the Bitcoin, and it wasn't just the financial crisis. It was all a huge 40 years work, and maybe even more. It's just was an idea before those 40 years of research. Just in, WEF member Yuval Noah Harari contradicts himself and gives one of the best reasons to own Bitcoin. We don't trust the banks, the government, so we don't want to give them the ability to create as much money as they like, so we create this Bitcoin. The next Bitcoin move is going to be even more exponential. Don't sleep on this massive opportunity right now. Someone just dropped $106 million in Bitcoin. Deep scared away all the paper hands, but the OGs are still here. In 2009, Hal Finney predicted 10 million per Bitcoin. He divided the world's wealth by 20 million and not 21 million. Did Hal imply that Satoshi would never spend his coins? It's interesting that a system can be configured to only allow a certain maximum numbers of coins ever to be generated, and I guess the idea is that the amount of work needed to generate a new coin will become more difficult as time goes on. One immediate problem with any new currency is how to value it, even ignoring the practical problem that virtually no one will accept it at first. There is still a difficulty in coming up with reasonable argument in favor of a particular non-zero value for the coins. As an amusing thought experiment, imagine that Bitcoin is successful and becomes the dominant payment system in use throughout the world. Then the total value of the currency should be equal to the total value of all the wealth in the world. Current estimated of total worldwide household wealth that I have found range from 100 trillion to 300 trillion dollars, with 20 million coins. That gives each coin a value of about $10 million. So the possibility of generating coins today with a few cents of compute time may be quite a good bet, with a payoff of something like 100 million to 1. Even if the odds of Bitcoin succeeding to this degree are slim, are they really 100 million to 1 against? Something to think about. Hal Finney in 2009. Next up, we go for big breaking news. Jpmorgan has bought $625,000 worth of Bitcoin, and this is really great. Boston-based Bracebridge Capital owns over $307 million worth of ARK's Bitcoin ETF. Also, when Bitcoin made the new all-time highs 1 year earlier than usual in March 2024, it created the first derailment of any kind of that halving cycle theory has ever seen. Price showed it could be 1 year accelerated on track for 4-minute top late this year. Could anything set us back on track for a top late 2025 as usual? There's one possibility. With a huge positive move following ETFs being out of the character, what if it was a fluke move? To prove this, price would need to extend the time it takes to reach all-time highs again by over 7 months, past November 28th, which starts our normal red year when all-time highs are made. It's a tall order, but possible. Otherwise, Bitcoin still remains on track for a top earlier than normal, which breaks the so far set in stone 4-year cycle as the halving cycle theory depicts them. When will Bitcoin break out? April to October, Bitcoin went sideways for 220 days. The breakout resulted in a 56% pump. November to February, Bitcoin went sideways for 70 days. The breakout resulted in a 63% pump. Bitcoin current consolidation has been going on for 73 days, and in my own opinion, this could continue until June. The breakout of this range will push above 100,000. Bitcoin has now been consolidating around its previous all-time high for 9 weeks. In 2013, this took 12 weeks. In 2017, this took 9 weeks. Also, Bitcoin is going to be on the balance sheet on every bank in America. Whoever is selling right now must be a fool, or they have no idea what they own. This thing could 5x by Christmas. Jpmorgan reports 760,000 spot Bitcoin ETF holdings, even as CEO Jamie Dimon called for shutting down crypto industry. Jpmorgan has invested approximately 760,000 in spot Bitcoin ETFs on behalf of its clients, according to recent filings. Jpmorgan's move, despite Dimon's criticism, is indicative of the increasing acceptance of the Bitcoin within traditional financial institutions. So the largest bank in the United States, Jpmorgan Chase & Co., has disclosed a significant investment in Bitcoin exchange-traded funds, despite its CEO Jamie Dimon's persistent criticism of cryptocurrencies. So the bank's holdings are spread across several ETFs, including BlackRock iShares Bitcoin Trust, the ProShares Bitcoin Strategy ETF, Fidelity's Vice Origin Bitcoin Fund, and Grayscale Bitcoin Trust, and the Bitwise Bitcoin ETF. In addition to this, Jpmorgan purchased 25,021 shares of crypto ATM provider Bitcoin Depot worth $47,000 and 34,662 shares of Bit Digital worth almost $100,000. This announcement follows a similar disclosure by rival bank Wells Fargo, which revealed its holdings of 2,245 GBTC shares worth $121,000. Dimon previously referred to Bitcoin as a pet rock used by criminals and speculators. So in December, Dimon reiterated his long-standing opposition to Bitcoin and other cryptocurrencies, actually suggesting that the government should shut down the industry. And in January, following the SEC's approval of a spot Bitcoin ETF, Dimon's stance appeared to soften, and he said, "I defend your right to do Bitcoin," eliciting a strong reaction from former National Security Agency contractor Edward Snowden. That's all the information we have for today's video, so don't forget to subscribe, like, and share. See you in the next one, and peace.